Your homeowner's insurance could double next year, and there's nothing you can do about it. Today, we're uncovering a financial crisis that's already hitting millions of Americans, including me. If you own a home or you're planning on buying one, this video can save you thousands of dollars. What you're about to hear might shock you, it may anger you, but it will certainly prepare you. Insurance premiums are skyrocketing by as much as 50% per year in certain areas, turning the American dream into the American nightmare. And this isn't happening just in hurricane zones. It's affecting every state and just about every neighborhood. And in this video, I'll show you exactly where rates are exploding and what you can do to protect yourself. Before we dig in, let me share with you what happened to me. Years ago, when we bought our first house here in New York, insurance was an afterthought. It was required for the mortgage, but nobody really thought about it. They thought about where can I find the lowest rate. Then Hurricane Sandy hit and insurance rates went through the roof. I didn't think much about it when it went up 10 or 15% a few years ago, but then it went up 10 or 15% again the following year, and then the following year again. I called my insurance agent and I said, why have my rates gone up almost 50% in the last 3 or 4 years? And he said, that's not true, it didn't happen. And then I had the actual numbers, at which point he got a little bit frustrated at me and explained that it wasn't him, it was the company and the industry. That's when I realized that insurance wasn't just paperwork, it was financial protection that could make or break you. And the fact is, homeowners insurance now isn't just a formality, it actually is a big weight on many people's shoulders, right up there with a mortgage for those of you that have mortgages. And the crisis continues to grow. The average homeowner's insurance cost is about $2,000 per year. And some homeowners in a very comparable home to the $2,000 a year home are paying $11,000 to $17,000 a year, depending on where they're located. And no matter what state you're in, these numbers represent about a 40% increase or more across the nation over the last 5 years, and there's no end in sight. And candidly, insurance companies themselves are facing very big payouts. In 2023, the market paid out about $90 to $99 billion in homeowners insurance claims, and insurance companies are losing money on a state-by-state basis much more than they have in the past. Major carriers like State Farm and Allstate are just wholesale abandoning regions. And even traditionally safe areas like Arizona are facing unprecedented rate hikes. And it's affecting every type of home: condos, townhomes, single-family homes, even small modular homes. They're all affected. And if you look at the data state by state, Louisiana tops the list in 2024 with a predicted increase of 25%. Maine is at 19%, but doesn't really have any of the typical triggers that would cause such an increase. There's not a lot of hurricanes that hit Maine, or earthquakes, or fires. Michigan faces a 14% increase, as do homeowners in Utah, North Carolina, and South Carolina, to name a few. And even stable states not known for disasters are facing big increases, like Illinois, Connecticut, and Arizona. They're looking at 9 to 10% year over year. Texas homeowners are now facing wind and hail protection as a separate policy. It's being separated from their traditional homeowners policy, and so that type of protection is costing more. Colorado mountain communities are facing a wildfire surcharge, which doubles the price of their homeowners insurance. And Florida's situation is growing dire with year-over-year increases of 100% and major insurance companies pulling out. And California homeowners in fire-prone areas struggle to find any coverage at all. In the Northeast, there is a big increase in premium costs for flood insurance, even if you're not near the water, or if you're elevated above sea level like I am by several hundred feet. In order to understand how to manage this as a buyer of homeowners insurance, you need to know what the root cause is. And that is, events are becoming less and less predictable. And the less predictable these events are, the more insurance costs. Severe weather events have increased by 300% since 1980, and the costs to recover from them have gone up astronomically because of inflation. The average home repair claim is about $12,000, which is double what it was a decade ago. Reinsurers, the insurance companies that insure insurance companies, are abandoning entire markets. Lumber prices have tripled since 2020, and a labor shortage is driving the cost of repair work and new home building up dramatically. And insurance companies are using new technology to assess risk more accurately. They'll send a drone over your house to see if it's in a risky area, for example. And climate data is showing extreme weather patterns that are becoming normal across all regions. And litigation costs, the homeowners that don't like what the insurance companies have paid out, sometimes appropriately, are now through the roof, and insurance companies are facing extreme litigation. And inflation has hit every aspect of home repair, from materials to labor to equipment rental. And new building codes on the back of that horrible building collapse down in Florida a few years ago require more expensive materials and construction methods. And here's what's happening to people that I personally know right now. Fixed income retirees are taking out home equity loans to pay for the upkeep that's necessary on their condos. First-time homebuyers are finding out that their insurance costs are more expensive than their property taxes, derailing their dream of owning a home. Existing homeowners are reporting a 30% increase in premiums overnight with no warning whatsoever. And small business owners who work from home face commercial rate increases on residential property. If you're saving for your first home, insurance costs could destroy your budget. Many buyers are so excited to get into their home that they focus on their down payment but ignore the cost of insurance, almost as an afterthought, because it does feel almost invisible to people. The debt-to-income ratios that are used to calculate mortgage affordability seem to exclude the cost of insurance, even today. And real estate agents all over the country are reporting a collapse of the real estate deal when the new buyer realizes how much the insurance is actually going to cost. Young families can't afford quality homes in good educational areas because of the cost of insurance. And homeowners are facing some pretty tough decisions: raise deductibles, reduce coverage, or strain to pay the proper insurance amount that should be on the home. So what are people doing? Well, some owners are forming local buying groups, but they're getting mixed results. And these issues have real-world outcomes. Some families are reporting mental stress, family disruption, or making different decisions about their retirement plans. Big decisions, in fact. Home improvement projects are getting delayed because the owners are saving for insurance instead. And selling? It's becoming difficult when the new buyer can't afford the insurance on their prospective home. And if you get really deep on this, estate planning is becoming a problem because the heirs can't afford to receive the home, even if they do it in a tax-free way, because they can't afford the insurance on the home. So what are people doing? First, they're turning to last resort options. Like Florida has a state-sponsored program that has 1.3 million people in the insurance program. That's triple what it was 5 years ago. California's own version, the FAIR program, has seen applications increase 400% since 2020. And these programs provide very limited coverage, no frills for sure, and very limited protection. Waiting lists grow longer, coverage gets thinner, and options start to disappear. That's what's happening. Some states are considering new legislations, but options are not on the table at the moment. And self-insurance becomes a risky last resort for desperate homeowners. But for those that have a paid-off home, some are actually turning to this option. So if no insurer will cover your home, you face impossible choices. Mortgage lenders can force expensive policies on you, basically double or triple what you would pay in the market if there was something available. Going without insurance risks everything that you built. One disaster could wipe you out. Homes may become literally uninsurable, crushing property values and wiping out entire neighborhoods. But you're not powerless. Here's an action plan to help you fight back. First, it goes without saying, but I'm going to say it anyway, shop for insurance annually and get as many quotes as possible, 3, 4, 5 quotes. Install smart devices that monitor water leaks, fire, and break-ins, because many insurance companies will offer discounts if something like this is in place. If you're going to upgrade your home anyway, upgrade to disaster-resistant options like a better roof, storm-resistant windows, and a security system that monitors for things that you wouldn't normally monitor for. Raise your deductibles if you have emergency savings, because this can slash your cost by 20 to 30%. Bundle home and auto policies together, which can save you another 25%. And keep your credit score high. Insurers often use it to set rates. Document all home improvement meticulously, because number one, if you ever need to file a claim, you need to have proof that all of those home improvements happen. But also, insurance companies like the meticulous nature of people when it comes to their home. Trim trees, maintain drainage, and reduce other obvious risk factors. And take detailed video inventory of your possessions. This speeds the claim process and make sure that you get what you're supposed to get. And then there are some advanced tactics depending on your specific situation. Look for professional association discounts. They are often offered to people of a particular class. If you're an accountant, for example, maybe the AICPA has some sort of homeowners insurance that you can utilize that might be better than one of the big insurance carriers. Who knows? Consider increasing liability limits instead of property coverage for better protection. And definitely use brokers that represent multiple companies, not just the one who represents one company. And time your insurance company switch during low claim season. this tends to have a better price when you do make the change. And investigate usage-based systems that monitor your home through technology to see how risky your personal behavior is. And if you really want to get loud, contact your state's insurance commissioner about increases in costs. Support local legislation that increases transparency in how costs are passed through to you, the end consumer, and attend town halls where insurance issues are discussed. And in terms of the future, well, it's sad to say that in 2025, the future looks like it's going to have some pretty big increases. Think about the California fire we talked about, and I can't see how things will suddenly stop at the end of 2025 and go back to normal. New technologies involving AI might help because there's a better understanding of risk out there rather than using the old model for a new world. But federal intervention might become necessary if things continue to go from bad to worse. And over time, building codes will evolve to build more resilient homes and reduce risk. But knowledge is power. And right now, you know more about homeowners insurance than 90% of the people out there. So if you think that there's someone who can use this information, please forward this video to them using the link below. The fact is, for the vast majority of people, their home is their biggest investment and they need to protect it. So they do need insurance. It's not optional. We've survived housing crashes, recessions, and the 2020-2021 era, and so we'll survive this as well. But we need to act now, stay informed, and help each other. If you like this video, check out that video, 10 Bad Assets That Will Make a Retiree Poor. This is Jeff Schmidt, and I will see you in that video right there.